Okay, well, when we talk about technology, you've got huge themes out there, including, as we were talking about earlier in the program, the continued explosive growth for AI. Well, when we're trying to figure out where the investment side of that story is going, we often turn to a leading analyst on Wall Street, Dan Ives, who gets so much interest in his predictions that he has now moved into the ETF world as well with his own exchange-traded fund. Dan joins us, and it's great to see you. Thanks for being back.
No, great to
us.
see you. Great to see you.
Well, first of all, let's tell us about the ETF. What it's all about.
Yeah, well, John, me and you have talked for decades, right? In terms of tech, and a big theme, obviously, that we've been front and center on is the AI revolution. And this is really an ETF that's focused all on our research in terms of the top 30 names we've taught, the AI Ives 30. That focus on the AI revolution, the winners from semis to software to consumer, robotics and others. And it's a way for investors that have relied on us for decades around the globe, that have a vehicle that relies purely on our research when it comes to AI revolution.
The Wedbush AI Revolution ETF. How's it going to trade? Where's it going to trade?
Yeah, New York Stock Exchange started yesterday. And look, I'm just excited, John, because, when I travel around the world, 3.5 million air miles later, investors always ask, how do I play AI? And now, based on our research, the ETF that's born, and it's exciting to me. It's because of the theme. It's a fourth industrial revolution. We're only in the beginning of what I view as a golden age for tech.
I'm feeling like as many questions I have about AI portfolio construction, I also want to figure out how you fly, because with all those miles, you have a few tips for travelers. But construction actually is kind of important, because the more people learn about this world, I think a good number of our audience members are familiar with companies that make chips like NVIDIA because of the explosive growth in their business. But there's the plumbing of AI. There's sort of the, with new data center realities, needing to keep everything cool. So there's technology tied to that. So how did you think about with the composition, what you wanted to have in there? What makes up a good AI portfolio?
Look, let's say Toronto is getting built from ground up. Buildings, infrastructure, energy. That's what's happening when you think about the AI revolution. The chips, that's the structure. NVIDIA, right? Obviously, TSMC, AMD. If you look at the core parts of the infrastructure, but it's software, it's the use cases, the Messi of AI, Palantir, the hyperscalers, Microsoft, Google, Amazon, others. And then you start looking at the use cases, MongoDB, Snowflake. You start thinking about the consumer side, Meta, in terms of how Google's going to play. When I view the China plays, names like Alibaba and Baidu that I think are going to be core themes in China. And then you think about autonomous, can't talk about AI without Tesla. So it speaks of the autonomous and robotics vision. And look, these are 30 names where names are coming in and out based on our research. And that's how we're doing it. It's feet on the ground. But for investors, so many that have watched the theme, can't just focus on 3-4 names, in my opinion.
And so one of the things that was coming up in an earlier segment we had about, and the message from that was be diversified. The challenge is that a lot of the companies that you track as an analyst have had such incredible returns over the last decade, 15 years, that when you put them up against, really sound, impressive businesses, but that don't have that tech torque, you start to see quite a widening gap in your portfolio. And then when we bring that up with people who are looking to stay diversified, a lot of times the thing they will say is, but now those tech names look so rich. Look at their valuations. Oh. So you get this question all the time. I've asked you many times before, but I think it's the important question. This is the most common thing that people say about tech is it's too richly valued, and its time has come and perhaps gone. So what do you say to that?
And yeah, of course, the clock struck midnight, dot-com bubble. Look, we're going to be talking about NASDAQ 20,000, 25,000, 30,000. Investors that have focused on valuation have missed every transformational tech stock the last 20 years. And it's my view, we are in a golden age. This is a tech bull market. Tariffs and Trump, that's not ending that. And I would rather be in the left lane in a Ferrari owning tech, paying up for those names going 100 miles an hour, than be sitting there owning value with a beat up minivan in the right lane going 35 miles an hour. And I think that's just going to continue to be the trend.
And when you talk, when you're doing all that traveling and you're talking to people and you're talking to different advisors, and even when you're talking with your colleagues, I mean, how much do you think AI should be in one's portfolio? If people are trying to figure out how much exposure they want to have, what are you finding sounds like sort of the right rhythms for AI, one's AI exposure?
Look, I think it obviously depends on risk and based on whoever the client. But look, from retail and institutional, like you're talking about fourth industrial revolution, that's going to be happening over the next decade. So to sit there and, put your hand over your ears and say, AI is just a fad, that's wrong. I mean, I've covered tech 25 years from dot-com bubble, burst, financial crisis, COVID, anywhere in between. This is the biggest tech trend we've seen in 40 years when it comes to tech. So I think from an investor perspective, if you just focus on valuation, you missed the run. You're going to miss the ride. And that's our whole point with why we've been bullish on names like Palantir and NVIDIA and Microsoft and, of course, Amazon and so many others. But, I think it just comes down to, look, some view Tesla as a car company. I've always viewed it as a disruptive technology player. Some said it can never go over 50 million. It's $1 trillion, right? So the point is, it comes down to growth and where we are.
Dan, good to have you with us. Thanks very much. Good luck with it.
Thank you.
Dan Ives is a managing director and senior equity analyst at Wedbush Securities, now has the Dan Ives Wedbush AI Revolution ETF.